Good morning. Today is Thursday, August 25th, 2011. Welcome to Forex In Four. Starting out this morning, I just want to show you a quick chart of gold here. And if you haven't seen what's happening up to gold in the last 2 days, it's been quite a move lower. We're down about $250 from the all-time high here. Okay, and it's just been just an amazing move as gold's gone lower. Now, what's happened to gold? Well, first let's look at this on a daily chart here. Okay, I just want to show you that this trend here that had been moving up higher, all right, is actually now looks like the trend is broken a little bit. Now, we can go back to weekly trends, and you'll see that gold is still higher. Okay, and all right, this is a pretty big pullback here, but on a weekly trend, gold has been moving up since, gosh, look at that, 750. Wouldn't that have been nice back when everybody thought the world was collapsing? But moving back to the daily chart, you can see that gold's pulled back significantly here, and why is that happening? Well, a couple things. First is the thought that going into tomorrow's Bernanke meeting or speech in Jackson Hole, all right, people thought that perhaps he was going to set the table for QE3. I mean, nobody expected him to come out and say, all right, QE3, but perhaps there was going to be some rumblings of that, which would have sent gold higher. Now, that people are starting to back away from that assertion, and I think tomorrow is going to be, just a little bit of a reiteration of what he's already said, nothing new, and that's it. The market has to deal with it. On top of this, okay, the CME, where gold trades, they actually increase the margin requirements. So that means that for every dollar you have, it's less gold you can buy. Okay, you can use leverage in the futures market to, if you have $1, you can buy, say, up to $10 worth of gold. Well, they've reduced that, so you can't buy as much gold, because what they're trying to do is they're trying to cut down on the speculation ahead of what Bernanke's going to say. Now, this may be interesting because they may be fearful that perhaps he is going to say something like a QE3 type thing, which could send gold, rocketing through the roof. So, gold is definitely pulling back here. You can see, a couple of days gains, or a week or two's gains can be erased in 1 or 2 days. But we're not done here and out of the woods yet. And obviously everything in the market all hinges on what Bernanke's going to say. But we can look at the rest of the currency market here, and we're on a daily chart, and you can just see that euro dollar's been in a little bit of a range. Let's just shorten it a little bit. And you can see here we've been just trading this range here, 145 to, it's actually contracted a bit. Bottom's about 143.50, say. All right, not much happening with the Eurozone. Okay, we know about the debt crisis over there, and their Greek bond yields have moved higher. They've got to have their vote on the EFSF. I believe it's coming out in the first or second week in September, where they actually go ahead to vote to expand that facility. So, that's going to be an important move, because you're starting to hear about different things popping in the market. Finland's asking for collateral from Greece. Well, if they get collateral, everybody else wants collateral. So they're not out of the woods yet over there in Europe. But Jean-Claude Trichet is actually going to be in Jackson Hole tomorrow. So who knows what these guys are talking about over there. But there could be something interesting to come out of there, but maybe not on the monetary policy side. Just want to show you the pound here real quick. Okay, pound is a little bit lower. They had the CBI reported sales figures came in worse than expected. All right, that means that sales are declining over there, and we know how sales can affect GDP. All right, tomorrow we're going to get the UK GDP figures, which the Bank of England has sort of been hanging on to, and they've been saying, listen, we need to see we need to keep monetary policy accommodative so that we can get through this rough patch GDP growth. Well, if they have GDP slowing significantly, then there's some talk that they could be potentially even more accommodative, which would put some pressure on the pound. So we'll just take a look. I'm going to step it out here to, let's look at the 4-hour chart, and you can see that we sort of moved up here, and we're starting to pull back a little bit. So it'll be interesting to say the least what happens with the GDP report tomorrow out of Great Britain. All right, we'll take a look at the dollar yen here. Okay, dollar yen, a little bit of a move higher off of these bottoms. All right, just got up just above 77. All right, they've got CPI figures out in Japan tonight. We're still expecting deflation there, though, so they don't have a problem with prices. But you can see here that we had this the test here of the lows, and yesterday Japan came out with their quote solution that they put $100 billion aside to help businesses deal with a rising yen, but they didn't actually do anything in the way of intervention. So the market, not really impressed with that, but I think right now markets are looking more, starting to believe more and more that Bernanke's not going to do anything with QE2, all right, or excuse me, with QE3, and stocks are still pushing higher though, which is an interesting dynamic here. All right, later this morning we're going to get the initial jobless claims here in the U.S. All right, we're expected to lose just another 400,000 for the week, which is pretty par for the course. That's a number that doesn't move the needle much anymore, that's just the way it is. Taking a look here at the Aussie real quick. Okay, you can see Aussie range bound. All right, we got the Kiwi. You can see Kiwi's probably range bound as well. Yeah, I mean, we're looking at 30-minute charts here, and you can see that these things have been fluctuating between their daily pivots. Here's the S2 support. All right, and we've got this R1 resistance there. So not a whole heck of a lot going on, and it makes sort of sense because you don't want to be putting on major positions or taking major bets until we hear what Bernanke actually has to say. I mean, chances are it's going to be nothing, and that's what the market's starting to bake into the cake. But if he does say something that's big, that could be a big deal. And part of the thing that's going on is that tomorrow we also have a slew of data coming out here in the U.S. All right, we also have the U.S. GDP figures. All right, we also have U.S. Personal consumption figures as well, and then we have Michigan consumer confidence. So these are all going to be released before Bernanke gets out and speaks. So, I wonder if he doesn't have two speeches already prepared. One if he gets good GDP figures, one if he has bad GDP figures. It'll be interesting. But, part of what's been going on is we obviously talk about this, and we've been talking a lot less about it recently because all these clowns have gone on vacation. But, what's going on in Washington, D.C. with the fiscal policy side of the ledger, how, we're not getting any relief, we're not getting any fixes, we're not getting anything out of Washington, D.C., and poor Bernanke is just trying to plug these holes in the dam before the whole thing bursts. But he's really going to need some help on fiscal policy side. So we're going to have to see what happens. I'm guessing that markets are going to be disappointed tomorrow, but it may be the kind of thing where you can't just take your toys and go home. All right, you still have to make the next best option. And at this point, it looks like with bond yields so low, I think that the 10-year is paying less than 2%, which you can get more interest in that just by owning Aussie dollar. They can get twice that basically, and without being locked up or being subject to interest rate moves and things like that. It doesn't make sense to be in bonds. So you got to be in stocks. And even if we get, no more QE coming in, all right, perhaps commodities pull back a little bit. But I think we could see an environment where stocks continue to rise. So maybe we're going to see something like dollar rises a little bit and stocks rise. All right, I know that's different from the usual correlations that we have here, but there's a possibility that it could happen because, quite frankly, money needs a place to go, and stocks look as good as anything else right now. So again, tomorrow, Bernanke speech, that's kind of what the whole market's waiting on. I expect we'll have a pretty narrow range today, and we'll see what happens there. But keep your eyes on gold. Wow, just big moves lower, and we didn't get the blow off top that I was hoping or that I thought we'd get recently. Okay, but you can see that was a pretty big move up, and it's possible we could settle in here just above 1700 and perhaps bounce higher if Bernanke says maybe some sort of further reasons on the table. So that's what I've got for today, gang. Good trading to all.